Welcome back to Everything Money. In this video, you will learn our thoughts about Nike, the stock and the company. We'll show you the financials, why we like this company as it grows, and why we might not like its stock price. We'll show you what you should be paying for Nike moving forward using our stock analyzer tool in our amazing Everything Money software. And Mo will hit you with the trading charts, all the charts and trends if you want to trade Nike at a quicker pace. I bring your questions about Nike, their growth, the possibilities, and their stock price to a couple guys that own and operate over $100 million in multiple businesses, real estate all over the world, and stocks, and they'll guide us and provide us with a mindset moving forward. Let's learn together. Here's Paul and Mo.
Thank you, Seth. So first off, guys, follow us on Instagram, Everything Money Investing, and then follow our 3 personal accounts because it helps us out quite a bit. All right, so here's our Everything Money software, exclusive software. I'm going to click the 8 pillars tools. I'm going to type in Nike. Holy shnikes.
Holy shnikes.
Oh my gosh, look at this stock. COVID low of $62. Now it's $166. All right.
Wow.
Since COVID started, I've never bought so much Nike stuff. It's true. I'm fueling this company and I'm fueling Apple.
It's a $260 billion market cap business. Pillar number 1, guys, in our 8-pillar process, we want the 5-year PE to be under 22.5. It's 69.
Uh-oh.
That's really high. That's triple. All right. Pillar number 2, we want the 5-year return on invested capital greater than 9%. It is 13.9%.
Very nice.
They have a really lame, boring dividend of 0.6%. Not their fault, though. It's because the market cap is so high. But they pay out $1.7 billion in dividends. Guys, remember, dividends aren't always safe. You have to compare it to their free cash flow. That's why we put it in your software, the exclusive software right here. They pay out 1.7. Their leverage in the last 5 years has been 3.85 billion, less than half. So they're all safe. And last year they did 6.2 billion in free cash flow. All right. Pillar number 3, we want revenue growth to be greater than in the last 5 years to be positive. So 5 years ago, they had 34.36 billion, now 46.2. And their goal is to get to 60. I don't know by when. I thought it was like 5 years, and they announced that in 18 or 19 maybe. So they're on their way.
Paul, besides all the numbers, is this one of these companies that's just going to be around forever? And
I'd be very, very, very shocked if my great grandkids are not buying. No,
Jordans.
By then. Jordans, yeah. They'll be like, who's this Jordan guy we always keep buying his shoes? What the heck's going on here?
keep going, Paul. Profit growth is pillar number 4.
All right, so we scroll down on our exclusive software just a little bit. We go to the net income, 3.94 billion to 6 billion. Check mark there. Pillar number 5 is our shares outstanding. Guys, we don't want to be diluted. If they're increasing the shares and we're obviously keeping our shares the same, we are being diluted. We're getting a smaller piece of a bigger pie. We don't want that to happen. So we go back 1.64 billion shares 5 years ago, 1.58 now. Check mark there.
I like that. Good. Yep.
Now, debt. I don't know anything about the company's debt, but I'm willing to bet they're very low. Mm-hmm. So we go back to the main page of our exclusive software. We go to the 5-year average free cash flow. We multiply this number by 5. That gives us about $19 billion. So we want their long-term liabilities to be under $19 billion because all good companies are going to be able to withstand the test of time, and that's done best with low debt, just like your personal life. If you have a ton of debt, if you hit a hard spell, it's going to be harder for you to come out of it without declaring bankruptcy. Same thing here. So we go to the balance sheet of our exclusive software, scroll all the way to the bottom, 15.31. So check mark there. We want it to be under 19. It hits it. Now, pillar number 7 and 8 have to do with free cash flow. So we go to the cash flow statement of our exclusive software. Free cash flow is cash from operations, less your capital expenditures. And the 5 things you can do with it are buy back shares, pay dividends, reinvest in yourself, make acquisitions, and
pay down debt.
Pay down debt. Boy, I got to remember that full, like whenever I throw it off, I'm like an idiot. But anyways, so in our software, in our exclusive software, we add this free cash flow line because the math is just annoying. We don't want you to do it. Why waste your time? I'm doing the math. So 5 years ago, 2.54 billion. Last year, 6.2 billion with an average of 3.85. So that's a check mark. And our final metric, we take their 5-year average free cash flow, we multiply it by 20 as a starting point for a market cap. Does this mean this is the right market cap? We don't know. The faster they're growing, faster the company is growing, the higher the multiple should be. But we start at 20. So 20 times 3.85 is $77 billion.
Uh-oh.
The market cap is $260 billion. That's a big fat X. And here's our 8 pillars tab. Seth, what does this look like?
Yeah, so folks, we do love this. These 8 pillars. We have 2 valuation X's, which means, Paul, as value investors, we need to just patiently wait for the stock price to fall, and then it'll get into our wheelhouse.
Yeah, and the great thing will be, Seth, at some point in 2022, our software will allow you to. Oh no, I'm sorry. Hang on, we can do it now. So as an example,
you
can go to the page and screen by those exact pillars. So you go to the 8 pillars tab and you can just sit there and say, you know what? I want every metric but the valuation one to show.
Come on.
And it'll show you all the stocks that do that for you.
Oh, wow.
Yeah. So now these are all stocks that if I were you, I'd be waiting just to watch for these stocks values to fall. So anyhow, that's where it is right there. Oh, so let me go back to Nike. Let's go back to Nike. Now, the question becomes, is Nike still a good buy or not? Well, remember, guys, every investment's the present value of all future cash flow. We don't know the future, so we have to make assumptions based on what we think is going to happen and see if it's a reasonable amount to pay today. So our most popular part of our website is the stock analyzer tool. It allows people to put their assumptions in, and it'll tell you exactly the price you need to pay for the stock based on your assumptions. So 10-year analysis. Since Mo was the Nike dream boat.
Yes.
Mo, give me some revenue growth numbers for Nike.
You think 5, 6, 7 is too high?
No, what I'd say though is let's go 4, 6, 8.
Okay.
Let's go a little bit higher on the high side, a little bit lower on the low side.
Okay.
Because I don't think it would. Well, 8% revenue growth for Nike for 10 years, that would keep them to about $100 billion in revenue. Maybe that's high.
It's not out of the realm, but it might be high for a conservative assumption.
Let's do 4, 5.5, and 7.
Okay.
Well, remember, we don't want the high to be a conservative assumption. We want the high to be like, hey, what do we like? If they hit it out of the park, what are they going to do? I
think 7 is that number.
Okay, then we're going to stick with 7. Great.
Profit margin, maybe 9, 9.5, 10.
But to me, free cash flow margin.
8, 8.5, 9.
I actually think 9, 9.5, 10 again. Because if you saw something, I was going to say it before. Their free cash flow and their earnings were pretty similar.
Okay.
PE.
Not 43, Paul?
Not 43.
42. 14, 16, 18.
I like that. You know why? It's an amazing brand. I mean,
yeah.
You're not starting a shoe company tomorrow and going, see you later, Nike.
Right.
You know, they've got Jordan. They've got LeBron. They've got a bunch of, they still have KD. Yeah, they still have Kevin Durant. They're great. So, guys, I put in 12.5% for desired return on all levels because I want to have a margin of safety. And if I want 9 or 10% return, I'll just buy an ETF. Hit the analyze button. Boom.
This makes sense, Paul. I mean, the market cap is drastically over what we think it should be by our calculations, and so the stock price would probably reflect that.
Yeah, it makes perfect sense. Guys, you might think I'm crazy, but it's just numbers at that point. Like every business, every investment is the present value of future cash flow, and when you buy a stock, you're buying a business. So this is the way I look at it. This is the reason why this part of our website and software is so popular, and why people sign up for it every day. It's because of this. So that's what I think about it.
If this resonates with you, looking at numbers to making your financial decisions, it certainly started resonating with me. I used to have arguments with Paul about how he was wrong, and then it's like, it's just math. Follow me down this path. So here we are. If you want this, Paul will tell you right now how to get it for yourself.
So guys, we created this software because early on in the channel, our subscribers wanted to be able to analyze their own companies without having to wait for us to make videos. So we just merely made the software. Now, granted, it took hundreds of thousands, but it is now here. You can join it now. Here's what you get. You get everything you saw in the video we just did. You get Everything in the mobile app. This is all mobile friendly. Carry anywhere you go. If you're on the bus, anywhere you can use it. You get 30 years of financial data. You get that stock analyzer tool, our most important aspect. You get exclusive daily content, between 1 and 3 videos every single day, just from us, only for the users of our software. You get access to Seth Mo and I. You get all the future growth of the software too, which includes real estate calculators, stock screeners, and most importantly, what's active right now, you get access to our community of like-minded investors. So many people around the world are alone in how they think about investing. But in our community, over 6,000 people are talking every day in organized chats, talking about all of their favorite investments, why they look at them, why they don't. This includes crypto. This includes Tesla. We're not discriminating. It's only value. It's all types of investing, all available for you for only $1 per day. Less than a cup of coffee, $1 a day. Whatever price you sign up for today is locked in for the future. Sign up now. There are 2 ways to sign up, everythingmoney.com or Patreon. The benefit of everythingmoney.com is if you sign up right now, you get no sales tax for quite a while because we're not big enough yet. So as you saw, compared to our other competitors, we are vastly more cost effective, and you get just as much, you get more than you get from the competitors. So sign up now, everythingmoney.com, $1 per day.
And if you're looking to trade Nike at a quicker pace, you can join Mo and all of his handsomeness in the Bid and Ask Nation, that top trading tier of our community. Mo, show them how it's done over here on the Nike in the charts, baby cakes.
So Nike had this big gap up. What was that? Yesterday, today, and it is coming right back down. So this is what happens when you have these gap ups. Everybody gets very excited, and then they come right back to reality. So it's going to probably come back down to this low 160 range. It's just going to consolidate there for a little bit. Don't be completely fooled by this. Excuse me. Don't be completely fooled by this pullback or this jump. Wait until this moves into the sweet spot, both red and yellow line. Then you can make a long-term run on it. See if you can run it up to these all-time highs, which are around 180. In the meantime, I would just come over here on a daily chart and just see if you can consistently get this influx of volume. Move into the sweet spot over here. Trade it. See, you're running into these moving averages right here. That's why you're running out of juice. In the 25-day moving average, it's at the 50. It gapped above the 100. So it could be a little bit of a rocky road without volume. But I would just say let this stock develop and move into the sweet spot. In the meantime, maybe you can get a day trade out of it because you're getting a lot of volume on it. Wait for this red line to move over 80% to go long on it. As long as you're over 80%, you can be in this thing with an engulfing candlestick in volume. And with a big jump like this, you can get movement to the downside too. And you'll be able to short this. If you get under 20% down here, this could be a very nice short. I shorted Nike. Let me go back to these charts. So when they had this big gap up right here, when they got to this peak of 180, I shorted them down to this area of 144, 145. So it does happen. Nike fluctuates quite a bit. So don't let news like this or earnings like this be the end-all be-all for you. So if you want to learn these rules and learn how to go long, go short, day trade, swing trade, whatever, come and join me in the Bid and Ask Nation. You'll get my Employed Trader series, which is 6 stocks that I go through every day, the Trading 101 series, which is all of the rules that you need to be successful, the exclusive Saturday seminars that I do once a month for the Bid and Ask Nation only, open Q&A sessions and teaching sessions, and the Discord community of 950 plus people. Come and join us.
Nike is a great company, not so much a great stock. We will wait for the stock price to fall as value investors patiently wait, and we will grab it sometime in the future. That's our take. Final thumbs up, and we'll see you guys next video.